So maybe your business pulled in 100k last year. Amazing. But here's the deal. If you don't know these 7 numbers, you could be leaking money without even realising it. I'm Lucy, and after working with hundreds of small businesses, I've zeroed in on the financial stats that make or break success. By the end of this video, you'll know exactly what to track to make sure that all of your hard work is actually paying off. Stick with me. These numbers are non-negotiable. Now, I know what you might be thinking. Numbers. Oh, I'm not a finance person. But once you understand these numbers, you'll feel so much more confident and in control of your business. You'll be able to make better decisions, identify areas for improvement, and most importantly, know where your money's going. Make sure to take notes because these are 7 numbers that are going to make all the difference. Number 1, revenue or sales. This is the total amount of money that your business brings in from selling goods or services. It's often called your top line. Revenue is the starting point for everything. Without revenue, there's no business. So when you're looking at your numbers, this should be your baseline. But a lot of entrepreneurs get completely caught up in focusing on just revenue. But they forget to think about how much money is actually left after their costs. A great example of this is, let's just say that you're selling a product for £100. On the surface, it looks great because you've made £100 in revenue. Whoop whoop. But in your cost of production for that product, it might be £70. Then your profit is only £30. So whilst growing revenue is crucial, it's also important to keep an eye on what's happening beneath the surface. So we lead really nicely into cost of goods sold or COGS. This is the money that you spend directly on producing your product or your service. Think of it like the raw materials, labour costs, shipping, and any other direct expenses directly attributable to your product or service. This number is absolutely vital because it directly affects your gross profit, which is one of the most important indicators of how efficiently your business is running. Let's break it down with a really quick example. Let's say you sell a t-shirt for £20. Your COGS or cost of goods sold, so cost of producing that, for the t-shirt is £8. This covers your fabric, your printing, the labour. So your gross profit from that sale is £12. The lower your cost of goods, the higher your profit. And understanding your cost of goods helps you make smarter decisions when it comes to pricing, budgeting, and negotiating. Now that we've covered revenue and cost of goods sold, it's time for gross profit. Now, I alluded to this a second ago. Gross profit is what is left after you subtract your cost of goods from your revenue. It's essentially your true profit from sales before you account for any overhead costs. Now, why is gross profit so important? It's because it tells you if your core business is working. It's the actual thing you're selling, and we want to know that it's profitable. So let's go back to our t-shirt example. If you sold a t-shirt for £20 and your cost of goods were £8, then your gross profit is £12. Gross profit is your business's health check to show how well your business is performing at its core. Okay, now we're getting into it. Operating expenses, which is basically all of the stuff that's required to run your business day to day, and it isn't tied in directly to making your product or producing your service. So things like your rent, your software subscriptions, marketing costs, insurance, and employee salaries all fall under your operating expenses. It's super important to keep a tight control of your operating expenses because these costs can add up really quickly. And if you're not careful, you'll then be eating into your profits. So a quick tip from me, track your expenses regularly. If you see that your operating expenses are creeping up on you, it might be the time to cut back or to find more efficient solutions. Now, the best bit. After all those costs are taken into account, we finally arrive at net profit. This is the real deal. The amount of money that your business is actually making after all of your expenses are paid. You calculate it by subtracting your operating expenses and your taxes from your gross profit. If you're showing a net profit, this means that your business is profitable. Pat on the back. If you're in the red, it's time to take a look at where your money is going and make some changes. Net profit is where the magic happens. This is what you get to keep, reinvest into the business, or use to grow your business. Next up is cash flow. I've put an exclamation mark because this is the one that most people misunderstand. Cash flow isn't about whether or not your business is profitable. It's about whether or not you have enough cash to cover your bills today. You can be profitable, but if you don't have enough cash in the bank to pay your employees or your suppliers, it's a huge problem. That's why they say cash is king, because cash flow really is king. Keep track of when money is coming in and going out so you're not blindsided by a cash shortage. If cash flow is tight, you might need to speed up payments from clients or negotiate better terms with suppliers. Check out our video, How to Manage Your Cash Flow, the 5 best tips I can give you around cash flow after this video. And finally, let's talk about profit margin. You can see I put a love heart next to it. This is one of my absolute favourite numbers because it's the ultimate indicator of your business's financial health. Your profit margin shows how much profit you're making relative to your revenue. You can calculate it by dividing your net profit by your revenue and multiplying by 100 to get it as a percentage. For example, if your business is making a net profit of £50,000 and your revenue is £200,000, your profit margin is 25%. The higher your profit margin, the more efficient and profitable your business is. If your margin is low, that could be a sign that you're either spending too much on cost of goods sold or operating expenses, or you may even need to raise your prices. To recap, the 7 numbers every small business owner should know are revenue, so sales, cost of goods sold or COGS, your gross profit, your operating expenses, your net profit, your cash flow, and your profit margin. It might seem like a lot, but don't worry. The more that you track these numbers, the easier it's going to get. If you're not already tracking these, I highly recommend using an accounting software just like Xero or setting up a simple spreadsheet. The key to all of this is consistency. If you found this video helpful, make sure to give it a thumbs up and hit subscribe for more tips on growing your business and managing your money. And of course, leave me a comment below with any questions that you have or tips that you have about your own small business finances. I'd absolutely love to hear from you. Do you use any of these already? Thank you so much for watching, and I'll see you in the next one. Keep tracking those numbers and keep growing.